Highlight of the session was it's okay to be bullish, but it's really important if there's ever a change not to remain bullish. Now, from 8:30 when we opened Central Time, which is in here, at some point we were getting really good validated strength, and there was no really good pullback at all to change that opinion. So you should be bullish, and the whole market, especially as you see it and it's defined, and even a fifth grader at some point says, "Mommy, I got to buy this thing. Look how strong it is." And it's okay to play it from that side. The problem is most people will miss the turn if there's a turn. You don't try to predict the turn before, because then you can get run over. Try to predict it as it's happening. You don't want to predict it too late, because then any fifth grader could see it. And so the metaphor goes that if a fifth grader could see it, probably so does most of the rest of the world. Well, a fifth grader probably is pretty bullish in this, and you don't normally get this. And when you get it, you got to understand what it means. A pretty bullish move, more bullish than people probably thought. We do a poll every morning, and mostly people were neutral today, and you should have been. There was nothing really bullish or bearish coming into the session. But after this nice rally, there was a lot of things to be bullish about. When you see this kind of capitulation rally and then drop pretty quick, somewhere about halfway in this move where my cursor is, what did we say? You got to respect that move lower. And respecting a move lower means that it's chances it's not going to just go straight back up to where it came from. It's going to go sideways to lower. Now, I'm not predicting, nor did I predict, that we were going to break 34, 5, 6 points from the highs. But what I did say was, take your horns off. And the bears were back in control, or were in control. And sure enough, it was play it from the short side, sell rallies, and be careful until you see an upside transition, which we never got. And you could take this thing all the way to real time. There was just no moment where you would say the opposite of, hey, the bulls you got to respect the upside now. Nothing in here. Everything was, bears are still in control. They kept holding overhead resistance and so on. Now, finally, we'd say it right now in real time. I would say at this point, and after this video is 10:30 Central on July 8th, you see right now, I would say you got to respect this rally. So not that these lows are necessarily in for the day, but they're in for at least a while. And the upside could be the right side until you can get into some resistance. But at some point during this rally, probably a little bit before now, because I'm just seeing it, this is the best bounce from all of this. All right. So when you get, let me just go over this one more time real quick. It's not just a reversal. It's the fact that you got everybody bullish and it did not hold any kind of support. And so when you get everybody bullish, you get them all trapped on the way down. And the more people you get trapped on the way down, the faster and more exaggerated the downside could be. If you get people, that's where reversals come from. You get everybody bullish and you get them loaded up on the way down, because they didn't buy it in this move. They bought it because of that move on that slide. Let me say it again. They didn't buy it in this move. They bought it because of that move on the way down, and they kept buying it. And because of this move, and they're like, and people stink at getting out of trades for losers. They mostly hold on to them, and it becomes self-fulfilling prophecy when it doesn't turn and go back up. Because what are most people looking for and read about and learn? Trend is your friend. Look at a chart like that. I'll buy this retracement and sell it there, and then I'll buy it again there and sell it there. Well, don't work that way. And this is why this was the downside, the right side, a nice reversal day as far as that goes. One other thing I'll show you in correlations, the NASDAQ had a beautiful head fake. I believe it was before. No, it was right there through 30, We talked about how there were buy stops above the series of rotational highs right there. They jump it, and then they quickly come back. It's not that they just came back. They quickly came back. Somewhere through the middle of there, they pissed off a lot of longs because they trapped them on what they thought was a momentum breakout. They shook out shorts and trapped longs. And that was a head fake, which is also tagging a reversal. We're going to go up? No, we're not. The reason why a head fake works, when you recognize it, well, you have to recognize it. That's what it looks like when I draw it. It's going to go up through these highs, so you get a lot of momentum longs. So you have more longs. Put an M in front of it. When you have more longs, you have more sellers. And then when you do go up, you shake out, squeeze out shorts. So you got the old less shorts dynamic at play. What does that equal? Less shorts equals less buyers. When you're short, you're a buyer. When you're long, you're a seller. When you're short, you're a buyer. If there's less shorts, there's less buyers. When there's more longs, there's more sellers. I don't know about you, but more sellers and less buyers is the recipe to make price go down. Have a safe rest of the session. If you're up, it's the summer. Don't be afraid to go for a walk around the block or whatever you do for fun. See you guys tomorrow.